Okay, mistakes is one of the best sources of learning, right? Successes mean you do the same thing over again.
It is the 21st century, and we have 5 kinds of war going on: trade, technology, geopolitical, capital, and military. At 4-decade highs, inflation is out of control, and a recession seems imminent. This is one of Ray Dalio's drops of knowledge after studying 500 years of history in order to apply it to investing. In these dark times where financial security is at an unsure place, we'll tackle Ray Dalio's financial advice on how to invest during inflation. Much of Ray Dalio's philosophy centers around economic drives and how it affects the dynamic of inflation and recession. Here are the 5 key themes that pillars Dalio's investment philosophy. Number 1. Investment risks and opportunities are influenced by the economy. Macro investor Dalio looks at economic patterns to spot possibilities and spot threats. In contrast, the micro investor gives more importance to company-specific technical research. In the 2000s, Dalio's macro outlook brought Bridgewater particular praise. Since he was studying the economy for a long time, Dalio recognized warning indications before the 2008 financial crisis. He made adjustments to the Bridgewater portfolios to get them ready for a downturn, and it worked. While the typical hedge fund lost 19% of its value in 2008, Bridgewater's Pure Alpha Fund increased. Number 2. Investors face a serious threat with inflation. Inflation's capacity to erode purchasing power and wreak havoc on investment returns is something Dalio respects in a healthy way. He has therefore long advocated for using gold as a backup form of currency. The all-weather portfolio, a well-known Dalio investment approach, includes a 7.5% allocation to gold. The all-weather portfolio is Dalio's go-to investment strategy for navigating uncertain economic periods. In addition to holding gold miner and producer companies, Bridgewater also holds gold funds with a 2.15% allocation. The gold ETF SPDR Gold Shares, New York Stock Exchange GLD, is Bridgewater's 11th largest investment overall. Number 3. By mixing uncorrelated assets, investors can reduce risk. Dalio strongly supports diversification to lower your risk-to-return ratio. He specifically advises diversification over 15 or more uncorrelated investments. Assets that are not connected do not move in tandem, either positively or negatively. For instance, there's a little link between gold and the S&P 500, so a decline in the S&P 500 doesn't always affect gold spot prices. Bridgewater portfolios have a wide range of assets, industries, and currencies. In addition, Dalio has acknowledged using cryptocurrency as a diversification tool. Number 4. On fully priced stocks, investors should sell for a profit. Dalio does not just have purchase and hold stocks. He favors selling pricey stocks for a profit and then reinvesting the proceeds. Appropriate targets for reinvestment are undervalued stocks, good companies that are trailing the economy of their sector. He refers to this practice as rotating the portfolio. This rotation is seen in the 2021 portfolio adjustments at Bridgewater. Bridgewater upped its holdings in emerging market funds while decreasing its stake in the SPDR S&P 500 fund. The action reflects the perception that the window of opportunity for U.S. large caps may be closing. In the coming months, it might be preferable to choose smaller developing economies. Time will tell if Bridgewater's wager comes off, although the S&P 500 has exhibited weaknesses in January 2022. Number 5. Losses for investors are significantly influenced by bias. Investors frequently have a positive or gloomy outlook on the market or a particular investment. Those are prejudices. Any type of directional thinking can persuade an investor to hold positions for an excessive amount of time and miss the chance to sell at a profit. Admittedly, letting go of biases is not humanly possible. You can examine your investment decision-making process on a regular basis. After recognizing your directed beliefs, consider the alternative situation. Dalio believes that diversifying is the best course of action in this situation. Just in case your presumptions about a certain asset class, industry, stock, or the market as a whole prove to be incorrect. In summary, the greatest option for protecting your savings from losing value is to put your money into a diverse portfolio of assets that outperform inflation. Learn to diversify your holdings into non-cash assets like stocks, bonds, and real estate, advises Dalio. This could be further made memorable with his famous quote, "Cash is trash," in the context of investing. So, what do you think? Do you agree with Ray Dalio's philosophy of investing during inflation? Would you practice having diverse kinds of assets? Let us know in the comments below. Like always, take care, and we'll see you in the next video.